Well, the grain markets are getting off to a positive start here on a Monday. Let's dive right into it here and see what's going on. On the corn market in Chicago, we have that December contract now trading 2.5 higher at 373 1/4. And we have the March 2 3/4 higher at 384.5. We have been as much as about 4 cents higher, or 3.5 cents higher at times. Let's take a look here at our soybean market. And on the soybeans, we have November now 14.5 higher at 897 1/4. What a jump. And look at where the low was overnight, 882 3/4. So we're off of that now by nearly 15 cents. January soybeans now 13 3/4 higher. On the wheat market in Chicago, we have that December contract now up just fractionally. 485 is the last trade, so it's only up 3/4 cent. On the open, or on the late overnight trade, it was actually up about 2. On the Kansas City market, we had some firmness overnight. It was about 4 to 5 higher, but now it's only up 2.5 on the nearby December. It's trading at 410. Minneapolis wheat has had some strong gains this morning, and we have been up quite a bit. Right now we're showing several cents to the upside on the Minneapolis wheat, so it's getting off to a good start. Let's take a look at the markets from the perspective of Dewey Strickler. He's with AgWatch Market Advisors, and he's in Franklin, Kentucky. So right out of the gate this morning, everything is shooting higher this morning, and it's kind of led higher by the soybeans and the Minneapolis wheat. Your thoughts on if they can continue that leadership role here?
Well, what I'm thinking here, Marlon, is that first of all, there's a couple of things in soybeans. One is optimism is rising a little bit here from last week, from where the trade delegation walked out of a farm in Montana here. And the thinking is that we may get into this higher level trade negotiations here in early October without any glitches. Second thing, you did have quite a bit of rain in areas of the Midwest here that over the weekend that's supporting beans somewhat. Also, you got a little bit of dryness in central Brazil that the trade is watching. And actually, the next factor is that we do have these funds are short corn, soybeans, and wheat. They're not short by any huge amounts, but nevertheless, they are short and they're being squeezed somewhat.
All right. Is that normal for this time of year, though?
Well, really, it's not normal. But, you know, since we've had this trade war going on, nothing has been normal this year.
All right. What about the outside markets? Dewey, we've been watching, for example, with interest, this energy market. The crude oil market has really been chopping around here for a couple of weeks after the attacks on Saudi Arabia, and that can have an impact here on the corn market through its tie with the ethanol, soybeans to an extent, I guess, through biofuel as well. But do you think that has simmered down enough to where that's not much of a factor anymore?
I think it has to some degree. One thing, if you look at a continuation chart of crude oil, you will see that we're just really been in a big, broad trade range in crude between 63.5 and 52.80. Nothing more than that.
Okay, well, what we want to do is take a break here, Dewey, and then we want to come back and see how this livestock trade is opening up. We had some interesting numbers that came out on Friday after the close, and they were related to the cattle on feed report. Now, keep in mind, we have the cold storage report coming out later out today after the markets close, and we'll analyze how the livestock trade is reacting to all this when we come back. We are talking with Dewey Strickler of AgWatch Market Advisors. Time to take a look at our cattle market. Let's see how we're opening up today after that cattle on feed report that came out Friday afternoon. On the live cattle board in Chicago right now, we have the nearby October contract up $1.85. We're at 101.20. That most active December contract up $1.92 at 107.08. Looks like it was a nickel higher than that, so it was nearly $2 higher on the open this morning. We have February live cattle now up $1.63. All across that board, we are at least $1.30 higher. All right, on the feeder cattle trade, some folks said that the cattle on feed report could have the most impact on deferred feeders. Well, they are. We have the October feeder cattle up $1.68 at 140.82, make it $1.63 higher now. But you go November on out, they're all at least $2 higher. November now up $2.28 at 139.30, all the deferreds. As I mentioned, over $2 to the upside. And on the lean hogs this morning, to start things out, we have the October up $1.65 and the December up $2.05 now at 68.30. I want to go back to Dewey Strickler of AgWatch Market Advisors and take a look at this. So the cattle on feed numbers had a low placement number Friday afternoon, only 91% compared to trade guesses of 94.5, Dewey. They were kind of wondering if the cattle would spike like they did. Is it maybe more than what you had expected?
Oh, I don't think it's any more than what I would expect here. Also, to adding to the placement number is that you had a strong cash market here last week, and that's given a little bit of support. We got a little bit of a gap higher in our December contract this morning. I would watch to see whether it gets filled or not, and if it doesn't get filled, I would look for maybe the market on the D's cattle to try to work up to about 109.
Now, that move that we have here in the lean hog trade this morning, some folks didn't quite see that much of a gain coming here with $2 to the upside. Is that in preparation for the cold storage report? Are they looking for something friendly later on today?
I don't know what they're really looking for in a cold storage here, but I know that China needs some pork, and there is a little optimism that is being built into this early October meeting. Now, secondly, when you look at the D's contract, the cattle, or not cattle, but hogs rather, when they peaked here at 71.60 a couple of weeks ago, the pullback to the low that we had Friday at 64.95 looks like a correction. That said, we should see some higher values here above this 71.60 mark down the road.
So last week, when that all happened late on Friday, with the trade delegation not visiting the farms in Montana and Nebraska like they had talked about, the trade negotiating team from China, there was a sell-off there. Now, are they rebuilding that on the thought that maybe things were actually going better than expected, and that's why they didn't return back to China?
I think so. I think the cancellation to that Montana farm there was nothing more than just a little bit of collateral damage.
All right. Looking forward now, of course, we have the outside markets to deal with here, and we've had the Dow Jones Industrial Average just kind of fairly close to historic highs. Is that going to support the meat trade?
Well, it won't hurt it. Let's just say that. You know, there are times that the meats follow that. I think the meats are really kind of trading on their own merits right now.
So far, the Dow Jones Industrial Average only down 18 points this morning. All right, thanks, Dewey. I appreciate the time. Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. So basically, a firmer tone all across the entire livestock complex to get rolling on a Monday.
Okay, thank you very much, Marlon.